Hey everyone, it's Doug here with Home Finances Explained again, and today I want to talk about life insurance. Now, I know it's a tough conversation, but we're all going to die one day. But you can be a bit more prepared for when you die, or you can be unprepared. And I'm not talking about creating a will and having all your assets be sent to everybody. I'm talking about life insurance. Now, it's estimated that about 200,000 men or women in the United States pass away at 40 years old. It's also estimated that about 50% of people have a life insurance policy independent of their work life insurance policy. So let's talk about the 50% of people that do have a policy independent of their work policy. Usually, depending on who is the provider and what is discussed, a life insurance policy should be 10 times your income, as well as an additional amount of what your debt is. So if you have a home loan, an auto loan, or student loans of maybe it's worth $300,000, as well as your annual income, you add those together, and that should be the value of your death benefit for your life insurance policy. So let's say that someone passes away and they have that 900,000 to $1 million death benefit. And this person is 40 years old, they're in good health, but they're going home one day and they get in a car accident. It happens more often than we think, and it's a terrible thing to think of. But if they had life insurance, while it's not any easier to deal with it emotionally, it is easier to at least deal with it financially. You'll be able to get a death benefit of 900,000 to $1 million to handle your debt as well as replacing that income, because the last thing you want to do when someone passes away unexpectedly is not know how you're going to eat, make ends meet, or pay your debt. And like I said, the flip side, if you didn't have a policy independent of that work policy, you're it's going to be a really stressful time. You know, imagine if the person who passed away has a family and that widow, whether it be a man or a woman, and they have kids. I mean, it terrifies me. I have experience working at New York Life as well as State Farm, and this was something that we always talk to our customers and clients about, was having a life insurance policy at least to cover your debt as well as some income replacement. So that's what I'm here to talk to you guys about today. Now, like I said, I discussed how much life insurance to have, but I didn't talk about the two different kinds of life insurance. There's term life insurance and there's permanent life insurance. Permanent life insurance is what they call whole life insurance. If you watch Dave Ramsey, you know that he is vehemently against whole life insurance, and I can understand why. Some pros of it are, if let's say you get this life insurance policy early in your life at 25 years old. Now, it is more expensive, so you're probably not going to get as much coverage as you would for a term life insurance policy. But let's say you get it 25 years old, you get $100,000 worth of policy, and maybe it's $85 a month, give or take. That's just kind of an estimate. Well, you will pay that $85 a month for the rest of your life. I actually believe it's until you're 60, depending on some policies. But let's say you pay it for the rest of your life, $85 a month, just short of $1,000 a year. Yeah. So you have this policy, and let's say at 45 years old, you develop Crohn's disease or cancer, you know, terrible diseases, but it does happen. If you were to get those, you know, diagnoses and you wanted to get term life insurance for your family because something could happen, more than likely you're not going to get approved. But if you have whole life insurance, it doesn't go away. That life insurance, that $100,000 death benefit, sticks with you. So that's the pro of whole life insurance. But the con is it's more expensive, and there's probably better ways you could spend $85 because you could get term life insurance, which is much less expensive, but the payout is not as often. Whole life insurance, have for your whole life, it's going to eventually get paid out because everybody passes away. Term life insurance, really, on average, 1 to 5% of term life insurance policies get paid out. That's kind of interesting, right? Well, let's think about it. Let's say you're 25 years old or 30 years old, and you buy a home. And whenever you buy that home, you say, you know what? I really want to protect my family or my parents or whoever is going to be the beneficiary of that home if you pass away, and you get a term life insurance policy for the life of that loan. Say you get a 30-year mortgage, so you get a 30-year term life insurance policy that covers the home loan amount as well as maybe 5 times your income because you just don't want to spend a bunch of money. Well, if you stay in that home and you're 60 years old and your term life insurance policy runs out, that's okay because you don't have to have your home loan covered with that life insurance policy because more than likely you've accumulated income and you have a retirement account and you've kind of got yourself self-insured, for lack of a better term. But let's say during that time you pass away while owning the home. If you have that term life insurance, then the beneficiaries can use that policy death benefit to pay off the home. If you didn't have it, they're probably going to have to sell the home or make ends meet. It just gets really messy really quickly. And the last thing you want to deal with when someone passes away is calling the bank and talking to them. And it just gets really, really messy really quickly because I've experienced both sides of it. I've worked in the life insurance field. I've also worked in the bank field. And it's just not a fun conversation to have either way. But it's much better whenever they come to you and say, hey, so and so died, but we do have a life insurance policy that will cover their home. Now, I do want to go over the pros and cons of term life insurance. The pros are it's much cheaper than whole life. You can get $1 million policy today. You hear it on the radio all the time for, $1 a day. And that's pretty accurate. Now, it does depend on your health. So if you get $1 million policy and you're a healthy person at 30 to 40 years old, it probably costs you $30 to $40 a month, less than $500 a year to insure your family. Awesome. Let's say you're a smoker, because that is a health risk, or you're obese, or there's other, diagnoses that you have. It can get more expensive, but it will be cheaper than permanent life insurance. So you kind of got to pick your battles and figure out what's best for you. There are pros and cons to both kinds of life insurance. But the main thing I want to tell you all is please, please, please get some kind of life insurance. If you can't afford the whole life or you want to get a higher value, do term. That's totally fine. Just do something that allows the beneficiaries and allows you the peace of mind if something were to happen. If you have any questions about this, please reach out. I would love to help you and your family or the beneficiaries figure this out. I am not licensed in this field. I just have some opinions. I have some past work experience, and I would love to pass that information on to you. Thank you very much. Take care. Look forward to seeing you next time. Bye.